Hello, my name is Alexander Mastalish, and I'm a junior, a part of Marquette University's Applied Investment Management program. Today I am pitching Ternium SA as a buy recommendation with a price target of $65.56, representing a 58.42% upside. So what is Ternium SA? Well, Ternium SA is a manufacturer and distributor of steel products. There's a long list there: slabs, billets, round bars, hot rolled coils and sheets, and some of your more high-end steel products. They technically have two segments: steel and mining. Steel has consistently made up the majority of their revenue. In 2020, it was 99.64% of fiscal year revenue, and mining only made up 0.36% of fiscal year 20 revenue. In the steel segment, in the steel side of the business, it serves end market users in construction, automotive, manufacturing, home appliances, packaging, energy, and transportation. And in the mining segment, it's just providing others in the steel industry and competitors with iron ore pellets. The company predominantly works in Latin America and South America, as you can see, but mostly in Mexico. You can see in Mexico, they have 53.3% of fiscal revenue coming from Mexico, a little bit of mainland China exposure at 10% of revenue, alongside around 14% in United States revenue. Ternium SA, or ticker TX, was founded in 1961 and is headquartered in Luxembourg. It is recommended that Ternium SA gets added to the AIM portfolio due to its status as a leader in steel manufacturing in Latin America since its IPO in 2006, as well as its continued roots dating back to 1961. It is currently well positioned to capitalize on emerging economies, with 71.6% of fiscal year revenue deriving from emerging markets. Ternium experienced a very fantastic year, both from margins and from revenue in 2021 due to high steel prices. And those prices, while expecting to dip, are going to continue into 2022 before dipping even more significantly in 2023 and 2024. Strategic investment into new operational centers will continue to allow for greater potential margin increases of around 11.65% in 2022. Newly introduced investment plans promoting sustainability, which includes a $460 million investment alongside a plan to reduce carbon monoxide emissions by 20% by 2030, indicates and highlights Ternium's commitment to being sustainable long term. Furthermore, continued key investments into the community indicate Ternium's commitment to not just the shareholders, not just its employees and executives, but all stakeholders. This is again demonstrated from their investment into infrastructure and processes, their continued investment and plan for the future and sustainability, and their commitment to education through their sponsorship of community colleges in the areas they operate. So as aforementioned, Ternium continues to increase their investment into infrastructure. So strategic investments have created potential margin increases throughout their business structure. They've opened or in the process of opening a new hot rolled coil plant in Pesquera, Mexico, which has increased annual capacity by 4.4 million tons. So this is a 47% increase for hot rolled coils, which equates to an 8% increase in total capacity. By Ternium increasing their capacity, they can increase their revenue by 8% and subsequently a net income increase of 11%. Continued investment into infrastructure should represent potential gross margin gains for years to come. So if Ternium continues, which I do believe they have plans to, continue to invest into their infrastructure, improving their processes, then they're going to foresee marginal increases in margins. Driver number 2 of my pitch of Ternium SA is strategic acquisitions and capitalizing on emerging markets. Ternium has recently made acquisitions to expand their outreach and offer new opportunities in emerging steel markets. They recently acquired a slab facility that will produce 5 million tons of high-end steel capitalizing on this market, which is increasing on 4 to 6% of demand for higher end products in 2022. So those high end steel. Um, they recently opened a Colombian steel and bar coil mill, which will continue their process of upstream integration into Colombia and South America as a whole. So currently only 20% of their revenue derives from South America, and that is a market that produces about 3.9 million tons a year, or 2.23% of the world's crude steel. So this is something that they want to get into. They want to expand into Colombia and some of these other areas to optimize their revenue. And increased market exposure should help against volatility. Driver number 3 of my Ternium pitch is market positioning with currency. Currently, Ternium is well positioned to capitalize and continue to capitalize on the weakening of the Mexican peso. Exchange rates of the peso compared to the United States dollars has remained relatively flat with a slight decrease. The lesser value peso makes imports more expensive. 56% of flat steel consumption in Mexico is imports. Ternium holds a large market share in Mexico and is well positioned to continue to capitalize on the remaining 44% of consumption. If the peso further weakens, consumers could shift more towards Ternium as imports will become even more expensive. In order to reach my price target for Ternium SA of $65.56, multiple valuation methods were used. An intrinsic value was calculated using a 5-year DCF model constructed with a terminal growth rate of 1.25% and a WACC of 11.05%. A country risk premium of 200 basis points was added to the WACC for Latin and South America country risk as well as currency risk. Using this DCF model, an intrinsic value of $73.38 was reached. Additionally, a relative PE and EV to EBITDA valuation was conducted and used, with multiples of 3.28x for the relative PE valuation and 2.35x for the EV to EBITDA relative valuation were used, resulting in a relative valuation of $56.47 for the relative PE valuation and $51.18 for the relative EV to EBITDA valuation. Peers were weighted based on operational similarities and market cap size. By weighing the valuations of 60% DCF model, 20% EV to EBITDA, and 20% PE, the price target was reached at $65.56, with a 58.42% upside being reached. With every investment opportunity, there comes risks. For Ternium SA, business in Mexico is a considerable risk. Ternium operates and has a lot of assets in Mexico. Most of the firm's revenue derives from Mexico, with 53% of 2020 fiscal year revenue coming from Mexico. Economic, political, and regulatory developments could impact revenue and profitability negatively for Mexico, or just in general. Currency is also a part of that business in Mexico. The peso relative strength or weakness could affect the overall profitability of the company. Next, volatility in commodity prices. Ternium operates around steel production. Commodity pricing of key raw materials, iron ore, is connected to the overall bottom line, and finished steel price fluctuation impacts the revenue. So depending on where finished steel commodity prices are, that could drastically affect where revenue is for the company for the year. And finally, although it's a very small segment, there are risks assigned to mining. And although, again, mining has such a small segment of the company, there are operational risks, specifically operational accidents that are involved in the dangerous activities of mining. Leading Ternium SA is Maximo Vendova, who has been CEO of the company since 2012. He is also the executive vice president and was in the past the former CFO or CEO of one of Ternium's subsidiaries. The CFO is Pablo Brizzo, and he has held the position since 2010. He also holds an MBA from Duke. The chairman of the board is Paulo Rocca, who has been head of 7 and is currently the head of 7 different steel companies besides Ternium. The board is comprised of 9 members, 5 of which are independent and 2 are female. In conclusion, Ternium's continued investment into infrastructure and processes, strategic acquisitions and movement into emerging markets, and being well-positioned for currency and commodity volatility makes Ternium a very wise and well-off investment. Ternium is also very undervalued at the moment, making it primed in position to be a value play for the AIM portfolio. Thank you for your guys' time today, and I look forward to speaking with you during the Q&A on Friday.